Hello, everyone. My name is Tammy DaCosta, and I'll be talking to you about what's been happening in markets throughout this week. I think if you've been following markets, not only with crypto, but just markets as a whole, we can all agree that there has been a lot of volatility, and markets have definitely been showing some signs of fear. If we look at Bitcoin, now we have had a very important data print that has just been released, and that would be the US non-farm payrolls report. Now, what this is an indication of the US economy and the US labor market, and basically what's been happening in the first full month of a Trump presidency. So, if we go quickly turn to the economic calendar, well, first we're seeing crypto, and we can see a general overview of what's happened on a monthly basis. Bitcoin, and remember, this is for March, so basically, it is prices are still down 7.29% and so forth. But then we look at things like Cardano, and we see some other coins where on a monthly basis they are in the green, and then on a weekly basis we can see Bitcoin is now in the green, Cardano, and there are some big moves. Now, if we need to look at what's caused the big moves, we're obviously going to have a look at that, and we're just going to do a quick walkthrough of what has been the market developments throughout last week. But before we do that, I just want to turn to the economic calendar, and then we can see that for today, and we'll go to the chart in a second. For today, we can see some of the economic data that has come out, which has included China's balance of trade, its exports, and just a general overview. Okay, year-on-year basis, you can see China's exports have definitely been taking strain recently. So this all ties into the tariff picture, and that's also been an additional contributor for price action throughout this week. But if we look at Bitcoin's reaction now, we are looking at the reaction to US non-farm payrolls, which represents the US labor market. So if we look at the headline figures, the forecast was, okay, it was actually 150, it was revised down. And then we see that it came in at 151. So this represents the number of jobs that have been added to the US economy in certain sectors, excluding non-farms, and then other certain other sectors. But anyway, this is basically portraying what is the labor situation in the US. And obviously, this is a big deal when it comes to monetary policy and just with regards to economic outlooks. Now, the unemployment rate did tick up slightly higher. And last month it was 4%, now 4.1%. All right. And then later, a key thing that we need to also be aware of is that we do have the Fed chair, Jerome Powell, that will be speaking a bit later on. And this ties into interest rate expectations and so forth. All right. So that's just a little bit of background on what's been happening today. And if we look at Bitcoin's reaction, what we can see here, and this is just the half an hour chart, the 30 minutes. Okay, so non-farm payrolls was basically, it was printed here, or it was released, and that is, okay, so South African time, it's 3:30. So if we're looking at GMT, it's 1:30. So what we saw, if we went to a shorter time period, we saw that initially, because we did have those expectations that, okay, maybe there was more fear that the labor market is going to be tightening. And obviously, if we don't have a lot of jobs being added to an economy, it is not good for economic growth. At the same time, a lot of the other fear that's been coming into markets this week has also been around the tariffs and what's been happening with regards to those new tariffs that Trump is now imposing on other countries in order to make them pay more for basically in order for companies to import from those other countries in the US, they would then be paying additional, for example, Mexico and Canada, 25%. And now Trump has said, okay, there's going to be certain items that won't face tariffs just yet, but China's already paying now 20% extra levies. So this obviously makes the cost of production a lot more, and then this gets passed on to consumers. So even though for Bitcoin and for crypto, we are still seeing these themes rattle markets, particularly because it affects the fundamental backdrop, we have obviously seen other factors that have played bigger roles in driving price action. And this week, well, let's also look at last week, what we had. So last week we had the whole Trump and Zelensky. So they were supposed to discuss a minerals deal. It didn't go well. But I think it's safe to say that throughout last week and throughout Feb, we didn't necessarily see a pretty picture for crypto. So this area here, where we're looking, so this is from the 21st of Feb, and then this was up until last week, Friday. So we can see that after a period of consolidation, last week, crypto really did take a tumble, and we saw prices, well, basically for Bitcoin in particular, it fell below 80,000 for the first time since November last year. But then over the weekend, we had something else that came. So even though we like the minerals deal didn't go through, and now we still had that fear of, okay, what's actually going to happen with the US and the rest of the world, because now fear starts triumphing, and we see that risk assets as a whole don't take very lightly to that. But then for crypto, what did we have? We had the announcement that Trump is actually indeed going to bring in that strategic reserve, and he has signed the executive order. So now that brings us to another area of consideration. So even though then this week we did see once again, we saw prices. So this was on Friday, and then we saw March started us in a very pretty way. And this was basically prices then landed up going back above 80,000. And then we got that crypto strategic reserve announcement. And we saw that Bitcoin bulls came back in, and we saw prices go higher. Then we saw tariff fears. So there has been a lot of whipsaw price action, and then it comes to today. Now remember, Bitcoin has been the leader in crypto. So a lot of the optimism and things like that were already priced in. But it comes to today, and we've seen that non-farm payrolls report, which means that, okay, the US economy or the labor market is still like performing relatively well. So no need to panic just yet, although we need to remember that these are all lagging indicators. So it's reflecting already what's happened last month. So generally in this situation, we're going to need to see over the upcoming months more of, especially now that those tariffs are actually coming into play. Now is when, going forward, we're going to have to see about more of that fear that is going to impact markets as a whole and volatility. So Bitcoin now, as it stands, we are now trading, and it is close to, well, basically the 61.8% retracement, and this is of this would be of the January to Feb move. So we can see that there have been areas of support and resistance, and these are the things that we're looking at. But we also have the crypto summit that is going to be taking place, and that starts at 18:30 GMT. So this is the first time a summit like this is happening, and the developments from that could easily also play a role in basically driving crypto's next move. So while we talk about Bitcoin and we're just looking at the daily movements, what I want to do is now let's go to a clearer picture and let's look. This is the volatility for crypto. So this is measuring the daily volatility. And as we can see here, we can see that crypto has definitely been struggling or has been in a very volatile situation over the past day and also over the past week. So if we now look at, let's go to the weekly performance, and we see over the week, well, for the past week, we do still see Bitcoin trading higher. XRP Ripple was one of those that really got a big push from after being announced in that crypto strategic reserve scenario. And so a lot of these are still, I mean, look at this. That's, that's insane. But a lot of these are still benefiting from that announcement. And because now there's a bit more of a legitimacy aspect to cryptocurrency. But despite the crypto summit, today we did see quite a pullback, or we did see prices that had been struggling. And one of the big things that we have seen in the build up to that summit is the one thing that the Fed, or that has been announced, is that the US strategic reserve is mostly going to be built up from coins that have basically been taken in different, lawsuits and so forth. So what this means is that now that reserve is going to be created based on stockpiles that are already in existence. It's not necessarily that the Fed is going to be funding, the purchase of new coins. So that put a bit of dampen on the expectations, but there's still a lot that can play out that, as I said, could be a positive or negative, push for prices. So if now we go to, okay, let's go to daily performance. Once again, so if we are looking a few hours ago, Bitcoin was trading quite a bit lower. So this is still optimistic, and it's showing that, okay, from that last labor print and so forth, there's not too much fear. The market's reaction has been relatively subdued. Now, when we're looking at the liquidation pools, I wanted to go there. So this is looking at Binance, the perpetual contract, and we can see these represent the zones of liquidations. So we can see another big liquidation level would be if prices fell to 84,000, and then, for example, above 92,000 as well, we start getting into those pools where liquidity, then, the probability of liquidation for the different holders now starts to come into play. And for example, we can see on the 2nd of March, so Sunday, with those strategic reserve, or with that announcement, we can see prices rose for Bitcoin 9.55%. And what happened to the liquidations? The short liquidations, because people that were short could no longer hold out for that move, they obviously get liquidated. And that contributes because they're selling on the open, so they have to buy to close. And this then lands up pushing prices higher. So this is something that we also need to take into account. But let's look at some of the other cryptos. And more specifically, what I want to look at is something like Ripple. Okay. Okay, let me quickly go here to the crypto. And then what we can also look at, okay, so we can see this is now gold to Bitcoin, the ratio. So we can see that is slightly higher today, but not by much. And then we can see that a lot of these coins like Bitcoin, Doge, they are now seeing a bit of optimism, and on a daily basis, this is actually bringing some positivity to the trading environment. Now, let's look at Ripple. And Ripple to me has been, it's been really, really key, especially in this whole change in the presidency and the whole transformation, because of the fact that now that its lawsuits and everything with the SEC are now a thing of the past, we can really, really see how those prices, how Ripple has just taken off. So, I mean, from the 12th of November, if we look in there, and this was just after the presidency, or let's look at the 5th of November. This was the day of the US elections. I mean, Ripple was trading at a low of 0.5016. Now, in January, prices hit 3.4. And then over this past week, once again, after the announcement that it is going to be included in that crypto reserve, we saw prices then go and retest that key psychological level, which remains in place as key resistance, which is at the $3 level. So over the weekend, when we had that announcement and Trump basically said there's going to be a crypto strategic reserve, we'd heard that before, but when he actually said, okay, there's going to be a summit, we are going to start adding coins to our stockpiles, then what happened with Ripple? We saw prices jump 34.17%. So that gives you the change in the fundamentals. And then, okay, on Monday, once we had those tariffs that are then coming into place, so we did see a lot of that market sentiment or that upbeat sentiment then dissipate. And now we've been seeing leveling off. From a weekly perspective or from a short term, the fact that these candles, or for the remainder of the week, Ripple prices are still within the body of Sunday's candle means that the short term perspective, in my opinion, is still bullish. So there is still upside. And as I said, we do still have that summit taking place. So if we get anything, anything can happen at these summits. It is the first one of its kind for the crypto industry. So I do think that there's definitely going to be some volatility around that event, and I would be quite eager to see what unfolds. So this is the whole picture for Ripple. Now it's all good and well to say, okay, this is the picture, this is what's happening, but now where do we go from here? And I think that's always the main point, or the major question that we need to ask in order to determine, okay, our levels. Well, first off, we need to determine where we're going to enter and exit positions, so risk management, and then as well is what are price targets. For example, we saw prices here test $3, or that was the high, and to me, that the fact that it was on a rounded number of $3 and it has tried to basically test those levels previously, not only now but back in 2021, we can see that that psychological level is quite crucial when we're looking at the upside potential. In the same breath, we see 2.2 has also been quite a key level as acting as support and resistance. It was previously, well, after Friday's move, it became resistance, and then after Sunday's move, it came back into play as support. So those are two key levels, but that's also a $1 difference is really, really big for something like Ripple. Okay, for Bitcoin, obviously not, like it's a drop in the ocean, but for Ripple, it is big because of relativity. So for Ripple, if we are looking at prices, as I said, I am waiting to see what gets said at the Crypto Summit to look for a more holistic picture and of the other influences that can be not only for Ripple, Solana, and for the coins that were actually mentioned by Trump, but we may actually see other developments. For example, what coins are they actually thinking of introducing Ripple to the finance sector and things like that? If that were the case, then yes, that could definitely still be a positive catalyst that could then refuel that bullish momentum. So just looking at price action currently, if we were looking at the short term, I think, in my opinion, yesterday's high of 2.645, so let's round up 2.65, would be more of an immediate zone of resistance that I'd be looking at. And then if we had a break above that, then we would basically be looking for further upside to 2.76. And then we could see, if there is another positive boost in sentiment, the potential to retest the $3 mark. We can also add in now, if we're wanting to look at things like the trend and the momentum, we could use the relative strength index. Okay, so we can see over here in areas like this where it is above, because the RSI is a momentum oscillator, and then we get the zones between 30 and 70. Above 70 is, it means that yes, it's a bullish trend, but it could be threatening over bought territory. So it's a measure of extreme buying. And then below 30 is usually extreme selling. So currently now we are looking at an RSI that is within the normal range. So the momentum is actually, we're not getting like severe. It's not like, for example, on Sunday where we get this peak where we nearing negative territory and then we shoot higher. So this has now shown that there is a leveling out in the momentum of the trend, and this is something that we can see or we can use just to see how that momentum is actually continuing. We can then also take something like the Fibonacci, and if we're looking here, and I've used the January to Feb move, if I'm looking at additional zones of resistance, 2.564 is the midpoint of the Jan to Feb move. Okay, so I would be using that as an additional zone of resistance. And then in contrast, that 38.2% level, which is the 2.3667, that would be an additional zone of support. And we can see that today at the current daily candle, that move has helped cap further downside. So it has actually come into play as an additional zone of support. So those are some of the moves I'm looking at for Ripple. Now, if we have to go to, let's go to Bitcoin. Okay, so once again, for Bitcoin, I've also used the similar move there. Okay, if we're looking at Bitcoin, we can see a similar picture with regards to the relative strength index. So we did see, and if we look here, see how prices ticked higher, and that was the 21st of Feb or the 20th of Feb. And then this was to last week Friday, so to the 28th. And we can see how bearish momentum definitely started coming into play, and that coincided with the break in of the zone of confluency, and there was a downside gap in prices which were filled on Monday. So we can definitely see that Bitcoin as well, similar, we've had these zones of confluency, but then generally when momentum does pick up, that is where we start seeing prices react, and then we see a big shift in one way or another. I mean, this was not a small move, especially if we're looking at, for example, from 98,000, to 78,675. It's a big move. It's $11,000 difference basically. So it is. Oh, sorry, what am I saying? It's nearly a $20,000 difference. Sorry. So, we do see that these are big moves, and this is obviously it triggers fear, and then we see this rebound. So now prices have been trading. We can see the relative upside, and what has also been important to me is these lower wicks. We can see that on these three candles, Friday, we can also see it on Tuesday, and we saw today where bears try to drive prices lower, and then we do see quite an aggressive rebound from the bulls, and this results in those long lower wicks. So this still paints a pretty bullish picture in terms of, and we are seeing higher lows. So we have been seeing like higher highs, although now we see once again that momentum, or there's a clear zone of consolidation where both bulls and bears are pretty much struggling to clear to right about the 90,700. We have seen quite a fierce battle between both the bulls and the bears. So these are other levels that I'm looking at. For the upside, 90,700 is still a key resistance level, and a push above that, I would also be looking at this 91,720, 92,000, and then 95,000. So those are the key levels that I'm looking at for the upside potential. And then on the downside, in contrast, we do see actually quite a big period, or quite a big area here, where there's also been a bit of, from 90,700 to 96,105, there's, basically we're looking at 4,000, roundabout like $4,500 difference there. And this zone, we've seen a bit of like quite a lot of activity recently. But over the past few days, when we've got that break, we've now seen that retest of that lower band and so forth. And then we've seen that retest of the upper band. So this zone is also now coming into play as another important zone of confluency. And so a break or a hold above that 9,700, and then a clear break of 95,000, then I can say, okay, that the bulls still have legs, and we could then see a potential retest well for 100,000 and higher. Although that's not necessarily my base case for the next few months, to be quite honest. But on the downside, for bears to actually gain momentum, we're also going to need to see a clear break of the 80,000 level, which we haven't really seen just yet. So there is still quite a bullish picture. But as I said, I am taking more of a cautionary approach when dealing with these markets. Okay, so now if we look at what's happening this week, or we can see, okay, let's have a look here. Okay, this was also the inflation rate. The unemployment rates. So US, so we can see unemployment has been gradually decreasing, which is positive. But I haven't been looking. Let's just see here. But as you can see, this is for the 1st of Jan, so that's not right. But let me go here. And this is what I also wanted to chat about quickly, is if we're looking at some of the futures markets. So we're not only looking at crypto and the fundamental backdrop for crypto, but we also need to look at what is happening, for example, with Forex markets. And we can see that the Euro USD actually is trading at, it's had its best weekly performance against the dollar since 2009. So that's really, really important, because once again, what we've been seeing is in a lot of, since COVID, we have seen a strong dollar, and we've also seen strong cryptocurrency. But a lot of cryptocurrency has been driven by US dominance. So there is definitely a correlation there. And even if we mention a strategic stockpile or strategic reserve, we need to remember that the power or the strength of that strategic reserve, and if it's actually going to gain traction in a global perspective, that also needs to be decided, and some other factors that come into, that we need to actually consider when looking at things like that, is the current tensions between the US and global markets, especially with Trump policies and with the whole tariffs and trade wars. Because if nobody, or if we've got more and more countries not wanting to do business with the US, and the US is the one that's backing the crypto strategic reserve or crypto stockpiles, then how much of a momentum or pushing momentum are we actually going to get from that aspect over the next few months? So a lot has to play out in terms of geopolitics as well. So going back to, and we haven't really seen the Euro area or other countries step up and also say, okay, we also in favor of a strategic crypto reserve and so forth. There's been a lot of, especially when it comes to the European Union and other countries, there's been a bit more caution and a bit more skepticism. We've also seen the Barber attack, so there is still a bit of worry around that. Okay, apologies. So now, if we look on a weekly basis, we've got the euro that's up 4.8% against the dollar. As I said, going back to 2009, this is the biggest weekly gain. So the euro is now coming out and it's strengthening, the US dollar's weakening, and this, once again, there's been a shift in those fundamentals and the economics. For other risk assets that we've seen, like stocks and, for example, the NASDAQ, if we're looking at the Mag 7, the Magnificent 7, and we're looking at NVIDIA, we've been saying NVIDIA's been the leader of AI, and that's been the largest component in the NASDAQ, or the best performer of the NASDAQ and S&P over the past 2 years. This week, we have seen prices down over 11%. So there again, it's coming out with that more caution or more cautionary outlook for the broader economy, and especially when it comes to tech and just the growth outlook. So now going into next week, while we're going to be expected to see, we've got the Fed Reserve President Jerome Powell, and he'll be speaking a bit later on. Then we've got the crypto summit. So those are definitely developments that are top of my agenda. But then if we then go to the economic calendar and we're looking at what takes place next week, then we can see that there are other factors or high impact data that is expected. So Monday we've got Germany's balance of trade, and I think when it comes to the developments in Germany as well with regards to its defense spending and a lot of developments there, that's also going to be a very interesting picture. We've also just had new German elections in Jan. We've got a change in party. So, just as a whole, there's a lot of uncertainty going on in markets. And this does, markets are very sensitive to the risk outlook. And crypto is also, well, it can't just not be, um, we can't just say that it's resilient to those other factors. It definitely is influenced by them. So these are the things: balance of trade. We've got Australian consumer confidence. We've got job openings for the US. And then Wednesday is another big day for the US because we've got inflation data. Once again, that ties into the expectations for interest rate decision on the 19th of March. And so these are other factors, or on the economic front, um, as I said, another very important consumer sentiment indicator, Michigan consumer sentiment. And then we've also got retail sales, and that is the following Monday. So out of the US, as I said, for next week, we've also got out of the UK. We don't really have too much of out of China, but we need to remember that this is scheduled event risk as well. So this is what we're expecting to actually be released from these countries. What's been driving markets as of late is more the unscheduled risks, such as those tariff announcements, and then also to see how countries are retaliating. Another thing to consider is, even though Trump has now said certain goods will be exempt from those 25% tariffs for Mexico and Canada for the time being, remember on the 2nd of April, sorry, there's the retaliatory tariffs. We've also got tariffs on steel and copper and aluminium that are now coming into effect. So just that whole tariff outlook is not helping market sentiment by any means. So that's something that does need to be monitored closely. And this is all going to be driving, or basically adding into that whole narrative of where do we go next. And this is where those technical levels then become really, really important, because this is also reflecting the trading psychology and just how, the behavioral side of things. So how do we explain a move like this? Is because now markets, or people, when there was announced that there is going to be a crypto strategic reserve and crypto stockpiles, what happens there? It's all the market known information now getting priced in, and that leads to the readjustments in prices. And this happens every time there's tariffs or every time there's economic data. We now have that change in the perception, or maybe change in the growth outlook, and then we now see prices adjusting to that. So that's just a weekly wrap of what I've been looking at, as well as what we can expect next week. So I am expecting more of a roller coaster ahead. The extent to that, we still need to see. But thanks once again for joining, and I will catch up with you next week. Have a great weekend and happy trading.